We shall now move to Lesson 2. How do you input the transactions? In this lesson, you will learn 3 important key areas. Number 1, how do you enter GST-related purchasing entries? Number 2, how do you enter GST-related sales entries? And number 3, how do you post the transactions to accounting? Let us start with the purchase transaction entries. The supplier invoices, purchase credit notes, purchase debit notes, and self-built invoices will be entered via inventory and billing system. After that, you will post the transactions to accounting. When you make payment to your supplier, you will enter the payment transaction via accounting system and offset with the invoices, credit notes, and debit notes. Let us look into some important areas related to GST. There are received and received by self-built invoice, invoice not paid within 6 months, and payment for outstanding invoices that are more than 6 months, import of service, and also capital goods handling. When you receive a supplier invoice from your supplier, you will create a receive transaction. After you have selected the item, the related GST tax code will be shown, and the GST amount is calculated automatically as well. Once the supplier invoice is posted, editing will not be allowed. If you need to issue a self-built invoice on behalf of your supplier, firstly, make sure the supplier is a GST registered company. Secondly, make sure it is approved by customs and an approval code is given. Maintain the approval code in the supplier file maintenance. To enter a self-built invoice, go to the Transactions menu and click on Receive Self-Built menu. After you have entered and saved the self-built invoice, you will need to print a copy of the invoice and send to your supplier. In the GST regulations, outstanding supplier invoices which are more than 6 months must, I repeat again, must have the claimed GST input tax be refunded back to customs. To cater for this type, go to Transactions menu, click on GST Bad Debt Journal, AP, and then select Refund Customs. Select the supplier, and all the outstanding invoices for more than 6 months will be listed automatically. Select the invoices which you need to refund the input tax claim to customs, and the financial entries will be generated automatically. These financial entries are generated based on the GL accounts mapped in the Housekeeping menu. Run Setup, General Setup at the GST setting. Click Save to save the transaction. When you have paid to your supplier for those outstanding invoices where the output tax adjustment has been processed, you may now claim those GST back from customs again. To keep this record, go to Transactions menu, GST Bad Debt Journal for AP, click on Reclaim Customs. Select the supplier, and only outstanding invoices of the selected supplier where output tax adjustment has been processed for tax refund from customs will be listed. Select the invoices which you need to claim back the input tax refunded from customs, and the financial entries will be generated automatically. These financial entries are generated based on the GL accounts map in the Housekeeping menu, Run Setup, General Setup, GST setting. Click Save to save the transactions. All imported services acquired for the purpose of business, except exempt supply of services, will be subjected to GST. The GST on imported services is payable by the recipient of the services using the reverse charge mechanism. An item with service type must first be created in the system via Maintenance menu, Item Maintenance, then at the Item File Maintenance. To record this type of transaction, go to Transaction menu, click on Receive. Remember to click Import Service checkbox on the header to indicate that this is an importation of service. After you have entered the payment transaction, go to Transactions menu, open Item menu Creditor, then select Knock-off Bills to offset the invoice and the payment. GST on imported services is only accounted for at the point when the transactions are being offset. Reverse mechanism treatment for input tax (TX) and output tax (DS) is automated in the system to ease your transaction worries. The definition of capital goods under GST context are as the following. Number 1, it is capitalized under accepted accounting principles. Number 2, it is used in the course of furtherance of a business. Number 3, that it is not for the purpose of reselling. Lastly, each unit valued at Ringgit Malaysia 100,000 or more and exclusive of GST. To record this type of transaction, go to Periodic menu, Capital Goods, and select Maintain Capital Goods to maintain the capital goods details after you have purchased it. If your company is making wholly taxable supply only, then you can claim the input tax for the capital goods purchased in full in the period you purchase it. If your company is making both taxable and exempted supply, then you will need to make annual adjustments to the input tax claim. For equipment, machinery, vehicles, it is at 5 intervals. For land, building, it is at 10 intervals. When the transaction is saved, the intervals will be populated according on the type selected starting from the year of purchase.